Okay, you ready? Are we ready to roll? Yep. Yes. Excelente. Okay, great. We shall begin. First of all, I'd like to thank you for spending time here. Those of you here at the live webinar and those of you watching the recording. Obviously, many of you are watching the recording. My name is Walter Peters, and I wrote the book called Naked Forex, and I like to trade simple patterns off of support and resistance. Essentially, that's what it comes down to. So where the market remembers where it found support in the past, it becomes resistance and so forth, and vice versa. And this is a very good example of this right here on the CAD yen. This is a trade that I just took moments ago, about 5 minutes ago, actually. And it's essentially this red line here is where the support I anticipate to be, particularly given this strong bounce yesterday, and now it's traded higher than yesterday's high, and so I'm in the trade. I also waited for the Asian session to mess around before I put it in. I like to get in during Europe or New York. So I don't like to get in during what we call the Asian drift, which is when the market goes against the natural direction of the day in most cases. Not 100% foolproof, but in most cases. So, hello, Pat Cat. So what we're going to talk about today is naked trading with an added element. Now, for those of you that follow me, my background is in psychology. So I have a PhD in experimental psychology, and I studied, in particular, thinking about your thinking. And we taught little kids to think about their thinking. And so, as you know, as a trader, you think a lot about your thinking. You think, why did I do that? or why don't I do this? And things like that. You become very introspective. And many traders are, in fact, introverts to begin with, and we're drawn to trading because it's a natural extension of what we're comfortable with, working with a computer on our own rather than a group of noisy people. But what I want to do here is share with you what I believe to be an extremely valuable framework for dealing with trends. And the reason why I found it to be so valuable, many of you probably are not inside the Naked Forex Now private forum where we've been talking a lot about this, but that's okay because you're going to get this information here today. What we do is we use the sentiment, or rather the open positions of the retail Forex traders to dictate our decisions during a trend. Now, let me state that another way. If you've ever been trend trading, you know that it's quite fun when the trend is engaged, and it can be a little bit stressful when the trend is retracing. There's a retracement against the trend, and it can be very frustrating at the end of the trend when it completely collapses and there's either a strong move against the trend or just moves sideways for some time and keeps popping you out of your added positions that you get into at the end of the trend. So the reason why I found this framework to be so useful is because it gives you basically a yay or nay. So when you see that the market is trending, you have to decide, am I going to continue to take trades in the direction of the trend, or should I be looking for the end of the trend here? Okay? Does that make sense? Did I explain that well enough? Because what I'm trying to do is marry the two. There's two important concepts here. One is the market trending? And the second one is the trend over? And this is a very difficult question to answer from a technical point of view. But what we found is that by using very easily accessible data, you can make some pretty on-point decisions. Nothing's foolproof, but you can get a pretty good idea of whether or not that trend still has some fuel, so to speak, or whether it's going to probably fizzle out. So does this sound like something that you guys would be interested in? Does this sound good? Would you be interested in diving into this today? Let me know in the chat box. And at the end of today's session, we'll certainly go over the live charts. If you want to look at them from a naked point of view, I'm happy to do so. But first, okay, sounds good? Excellent. Cool. So this is what we're going to do. We are going first, we're going to talk about the trends and sentiment. So First of all, what we need is a market that's going in. I'd wanted to show you the CAD yen simply because I'm going to trade here. I'm looking to take profit at 93, 94.20. I bought, so my blue number is my entry price. My red number is my stop. So I've got 105 pips of risk here on the daily CAD yen, and then I'm targeting 93, 94.20, and then I'll put a trailing exit on one too. So you got three potential targets here: 93, 94.20, and then the trailer. Okay. All right. So let's move to perhaps the. It's unfortunate because, you know, it's really too bad because a couple of weeks ago, we had some really strong trends. Actually, about a month ago, we had some great examples of this style of trading. And right now, it's a little bit tricky. Let me share with you what I use. These are sort of the tools that I use. I'm going to bring these over for you. You should see these in a moment. Can you see my my screen here? So you shouldn't see the charts anymore. Yeah, cool. All right. So what you're looking at here is the Owanda open position ratios. There's several places where you can get these data, and the easiest way to get to the Owanda one, which is the one I like, is to go to fxjake.com/crowd. If you go to fxjake.com/crowd, it'll just pop you right onto this page. Cool, you see Owanda. Great. All right, so these are the numbers we're paying attention to here. Now, the first part of this is to find a chart that is trending. You want to find a strong trending chart. And then after that, you go to these numbers to see if it's completely out of whack. Now, what do I mean by out of whack? What I'm looking for is I'm looking for 70% of the traders or more to be in one direction. So in the case of, and now for gold and silver, I'm actually looking for 80% because there are far fewer traders that trade gold and silver, and they all have a long bias. You know, gold and silver are kind of like stocks or indices where, you know, most traders are actually going long. It isn't often the case that traders are shorting. So, you know, it's not really the same, but because they are more likely to get, you know, 70% bullish positions, I have that 80% barrier for gold and silver. You can see gold right now is about 50-50, and silver is very bullish. It's at 78 to 21, or 78.5 to 22, 21.5. So basically, it's close. Silver's close, as is to the 80% mark, and the Euro Aussie is really close to the 70% mark. In fact, it was just on it the other day. So these numbers, I believe, are updated every 20 minutes, which is nice. You can also find these data at places like Daily FX. So you can see here at Daily FX, you can see how 84% of the traders are short S&P 500. That's a pretty good sign that that you want to go long. And most traders we know lose. So what we want, and they even put that here, that's a bullish sign, right? Here you can see that 65% of the traders are shorting the pound, so that's a signal bullish. Again, these are going to be IG market data because IG market owns Daily FX. But I don't like to trade the 65-35. I only like to rely on these numbers when they're 70-30. So this is another one. See how it says gold here? They're reporting that 71% of the traders are long gold. I would, again, I want to see gold or silver touch the 80% mark. So there's a higher barrier for that. So there you have it. Now there's another place that I know you can go to get this, and this would be at the Saxo. And you can see Saxo here showing 53% of the traders are shorting the euro, 61% of them are going long, it's pretty well even across the board here. Euro yen is one. Here you go. Euro pound. Great. So euro pound, euro yen and euro pound are two. Okay, let's look at these. Let's look at euro yen and euro pound, shall we? Let's do that. All right. So let me show you how this might work. So here's my euro. Here's my euro pound right here. It's clearly in a downtrend. And what we know from the data is we know that most traders are shorting it and very few are going long. Oh, isn't that interesting? So, this is actually fascinating. Normally, in most cases, you would this is not what you see. In most cases, what you see here is wow. Okay, this is not a textbook. This is not a textbook. Let's go to the euro yen. We'll come back to the euro pound. I do want to talk about the euro pound, but let's talk about the euro yen first. That's not ideal really, because it doesn't really illustrate what I'm talking about. It's almost the opposite, but that's okay. So here we have the euro yen. The euro yen went up, it flatlined, it went up, it flatlined for some time in this box, consolidated, and then broke out again. I believe that the euro yen is going to go higher again, and I think that you can see that the market made a little bit of a bounce off of these highs over here, right? These highs, which were resistance, and resistance became support. I think it's going to go up, and I think it's a no-brainer that's probably going to at least go up to 134.20. And it's right now at 132.55. So 100 and whatever 70 pips or something like that. I think definitely is possible for the euro yen. So now why do I say that? The reason why I say that is because a large chunk of the retail, no, this is important, retail traders are going short. They're selling euro pound. So, sorry, euro pound, euro yen. They're shorting euro yen. So it's gone over that 70% mark. Remember, we go back to Saxo. You see here on the euro yen, 69.82% of the traders are selling euro yen. That means you will be in the 30% group if you go long. You always want to be in the minority. Let me state that another way. Most retail traders lose. When a lot of retail traders get a bright idea, there's a pretty good sign that that's not such a good idea. That's just another way of saying that. We don't want to be in the herd of losers, right? So so that's the first step. First step is find a trading market. This market's been going up. Now, granted, it hasn't been going up consistently like we had a couple months ago where we had boom. Actually, the euro is a really, really good example because the euro was like this for months and months where it was just going up and then up, and every time it did this, all these people were shorting it here, and I said, no, I think it's going to go higher, and it did, and it kept going higher and higher. Everyone kept shorting it here and here and here, and it kept going higher and higher. And even when it made this bullish flag, where these wicks were made, the vast majority of traders were shorting it. You can go back in the Owanda data and look at that, and I'll show you how you can see that. So you can compare the percentage of traders that are long or short versus price, which is really puts my theory to the test. Because you could be sitting there thinking, I don't know about this Walter character. He could be blowing a lot of hot air. And I encourage you always to test whatever someone tells you and make sure it's your reality. And this is no different, no doubt. A lot of people will argue with me and say, well, how can that be that the market's going to go up if everyone's selling it? It has to go down. No, remember, we're talking about retail traders here. So it doesn't really matter why retail traders are wrong. We just know they're wrong. Another example is if I take my underwear off and I put it on top of the roof on a flagpole, it doesn't really matter why my underwear is going to be flapping around in the wind, telling me which way the wind's blowing. it doesn't matter. It doesn't matter why that's the case, but it is the case, and it will show me which way the wind's going. And so that's what we're doing here is we're using the barometer of retail traders to determine what should we do here with this trend. So let's go back to the euro yen. So I think, given what we saw in Saxo, now I will admit that we don't have quite the same numbers on Awanda. You can see on Awanda, the euro yen is at 65, so it's not at the 69.70 level, but it's close. And they're not always going to match up. And my advice is just find one that you like and stick to it. So this is a little bit higher. It's still saying, and it might not be refreshed as often. You said 1 hour. Yeah, I don't know how often these data change, but here you go. This is right on the 70% mark. I would expect the euro yen to go up. Now, if you think about it, what are the traders thinking when they see this chart? Well, the bears are thinking, oh yeah, it's completely collapsed. This move has gone too far, too strong. It's falling. So they're selling here, and you can actually see where their orders are. And Awanda will give you tools on that. In fact, let's do that. We can go to Awanda. Awanda orders. Here you go. The order book. So this will show you where, let's see, do I have my euro yen here? Yes. Actually, do I have CAD yen here? No, they just give you the big ones. Okay. So this is, okay, so here's how to read this. This is euro yen, right? So these guys here have sell positions that they took up here, right? Okay. And there's some more sell positions if it goes a little bit lower, and there's some buy positions if it goes a little bit lower too. You can see there's a whole bunch of buy orders between 132.57 where it is right now and 130. Really, there's a huge clump right there, right? So if it goes a little bit lower, there's a lot of buying that's going to come in. Now, what might those orders be? Well, they could be buy orders for the bulls. So the bulls have put some limit orders in there, and they're saying, well, if it gets a little bit lower, I'm going long, baby, right? But it also could be take profits for the bears because they're already in a little bit of profit and they want to get out of their position. What about so those are the orders, right? What about over here? We can see a whole bunch of traders have gone long up here. These are like the trend traders, the breakout traders, the ones that see a higher high and they think, okay, it's going to keep going. Well, it's pulled back a bit. You can see a lot of the bears have shorted on the way down here, right? And look at this. Now, this is the amazing part of this. And this is what I find fascinating, that there are so many open short positions that are basically right here, okay, right about where we are, just a little bit lower than where we are right here. So they shorted up here, right? Up here, and then these guys went long up here, so they're in a drawdown. And then down here, you can see that their buy orders are really close to where they shorted because it has. I mean, they couldn't have shorted up above 134.40 or whatever the high was because the market hasn't been there in so long. It was a long time ago. So that's why you don't see any orders up here, right? You do see. You don't see any because they couldn't have taken a trade. The price didn't touch there yet. You do see some orders up here for the guys that are trend followers or whatever, and they were just waiting for the market to get there. But so this is what it's telling us. If the market goes just down just a little bit lower, there's a whole bunch of buying that's going to come in. So what that tells me is that there's support on the horizon and that we're going to see the market really bounce. If it hasn't already, if it gets a little bit lower, it's going to bounce. and it's going to come right back up. So I don't really expect the market to go much lower. If it does go lower, I expect to see a wick, a wicky candle, and a sharp bounce up. And again, that's because these dudes are wrong. They're wrong, they're wrong, they're wrong. And they're always wrong. And even when they're right, they take profit so quickly, they don't take advantage of when they're right. And we know this from the data. You can look at studies. There was a really good study that was printed on DailyFX about this. We looked at millions of trades. And in fact, most retail traders win more than they lose, but they lose so big that their winners are so small, it doesn't really matter. And so we're just using this as like a wind sock to tell us which way is the wind blowing. See if we can refresh this. I wonder if the numbers have changed. No, same. Okay, they haven't refreshed it yet. Okay, so does this make sense? What we're looking for, so let's just recap here for you. Okay, number one, we're looking for a strong trend. Okay, and then what I like to see is on the pullback. So let me write this up here for you so it's very clear for everyone. Number one, identify a trend. Do you know how to use a consultant to find out if there's a trend? What you do is you pluck a kid between the ages of 5 and 8. You sweeten the deal with a bribe, like a biscuit or a chocolate, and you throw it on the line chart. You throw it on the line chart, and you say to the kid, "Is this line been going mostly up, or been going mostly down, or mostly up and down?" And the kid will tell you if it's going mostly up, or going mostly down, or mostly up and down. Equally up and down. And then if they say mostly up, you're in an uptrend. If they say mostly down, you're in a downtrend. If they say it's going up and down, then you're in a sideways market. And so once you've identified the trend, then what we do is we wait for the pullback. So this is number two. Number two is wait for the pullback. Pullback or retracement, whatever you want to call it. And then we get confirmation. There's two things that I'm looking for here. Let me move this over here for you. There's two things I'm looking for here after the pullback. One is I'm looking for 70% plus going against trend. Okay, I want 70% plus going against the trend. Okay. And once I see 70% of the traders thinking that the trend's over, I know the trend's going to continue. And then the last thing I'm looking for is a candle sign. Now, I actually don't like this candle, a candle confirmation. So basically a naked trade that tells me, yep, it's going to go. I actually don't like this candle. Okay, so let me zoom in here. Some people will look at this candle right here and they'll get really excited and they'll say, "Woohoo! We've got a bullish kangaroo tail." To me, this is not good enough. It's got to have a longer tail down here, clear out a lot of orders down here. It's too small, especially compared to the previous candle. So I don't like this candle. I still think there's a potential that we can see the market stab lower before it bounces and goes higher. And that's fine. There's a lot of orders down there that are gonna, a lot of the bears are gonna be out down here. If it gets down there, they're out and their fuel has been burned up. There's still a possibility that we're gonna see, and maybe that happens today or tomorrow, or maybe it happens during New York today. I don't know. Maybe it doesn't happen up today, but I think that this is not a good formation. Now, what happens if at the end of the day, tomorrow, 5 p.m. New York time, when my candle here closes, what happens if this ends up being a really strong bullish candle like this one or this one? Well, then what we'll have on the chart is we'll have a bend. Just see how this blue line here on the line chart is just like this? It'll be like all the way up like that. And then it'll be, yeah, okay, cool. I'll put a buy order above the high or whatever. That's fine. I'm happy to do that kind of trade, but not based on this. So this trade actually falls apart on number 4. It doesn't give me a nice naked trade. We're going to look at this and call it a kangaroo tail, but it's way too small for me. Those are trap trades to me, and I've taken too many of them to know, it's not a good idea to try and keep your uh, your stop really tight. The reason why traders like these little tiny candles is because their stop's so tight. But the reason why they don't work as well is because, well, their stop's really tight. So I don't like that one. So now what I want to do is I want to shift over and I want to talk about the euro pound because the euro pound's doing something really interesting compared to what we normally see here. This is what we normally see. We see a strong trend. We wait for the pullback or the retracement. We wait for 70% of the retail traders who are losing. We know they're losing. They're going to go against the trend. They're going to say, oh, the trend's over. Yeah, I'm going to get in on it. This is going to be a great move. And then we get the candle formation and we go in there. So what's interesting is that this doesn't apply to the Euro Aussie. So the Euro Aussie has one bit of, I'm just going to quickly show you. The Euro Aussie is almost on 70%, right? But guess what? It doesn't have all that other stuff. It's not in a strong trend. It doesn't give us any candle confirmation. It's got nothing. Here's the Euro Aussie. It's in a complete mess. So while it would be nice to be able to go long Euro Aussie, it's not trending. It was trending over here in April and May, but since then it's actually. So this is an example of a market that it was at 70%, I think earlier today and yesterday, or 69.8 or whatever. It was right on there. And it pieces here. So that's a case of, if I took a trade here, I'd be trying to squeeze something out of it. And to me, that's not worth it. It needs to be trending. All right. So let's go over to the euro pound because this one's fascinating. This is quite rare, actually, that you're going to see this. But if you go pound, I want to see what it is here. So they're calling it, most traders, so Owanda's calling it 63% of the traders are shorting. And we don't have euro pound on IG. But yet euro pound, they're saying that 74.5% of the traders are shorting it. Okay, this is a great example of the trend is over. That's it. Game over. It's not happening. I mean, this is quite rare. It's almost always the opposite. When you have a strong downtrend like that, usually it's flipped, and you got 75% of the traders are going long, and 25% are going short. So this is fascinating. So what I'll show. So again, look at this. Most traders are shorting it right here. So what I would expect to see over the next day or two on the euro pound is some sort of exhaustion candle, like a really nice long-tailed kangaroo tail that goes down here below this area here, like into this area here. That would be great. If we got something that was into this area, a nice long wicked candle, that would be a great opportunity to go long. Let's just back this up a bit and see. Yeah, this is a great spot. Look at this resistance, support, support, support. It's a great spot for trade, looking at support and resistance. But more importantly, this is just like amazing that everyone's shorting it right here. They're expecting it to break this level, and it's not going to do it. It could have a false breakout, but it's not going to do it. So this is sort of the opposite of what you normally see. I'm going to tell you, this is very, very rare that you see all these people piling in on a trend like this. So basically, it's over, right? It's over. We're going to get some sort of news or reversal. I don't care what the news is. I don't pay attention. Really, it's not that important. The chart tells me everything I need to know, and looking at the sentiment, I would expect that we're going to see some sort of kangaroo tail, some sort of long wick candle here, and then boom, that's a great opportunity to go long. And I would probably look to possibly move to break even if it can get above 88.90. And then there's another spot here around 89.70, and there's another one up here around 90.40 and 91 and 92. So all those potential profit targets for that one. So this one's really, really cool. And like I said, you don't see this very often. So this is an example of a trending market. It's had a bit of a consolidation period, and then now everyone's on board. There must be some news or everyone's expecting something. And so what's happening now is we're going to get a fake breakout of like some sort of false breakout here, which actually, if you look at the euro, let me share with you the euro. So I had the euro in this box here, and um, it wouldn't surprise me if the market hopped back up into this box, given what we know about the euro pound. That the fact that the euro pound, everyone's selling euro pounds, so probably the euro is going to get a little bit stronger, and the pound is going to get a little bit weaker, which is interesting. So, are there any questions about that? Do you see why I am saying that I think that trend is over? Most of the time, you won't have that decision to make. Most of the time, if you're using these data, what you will decide is, oh, this is just a retracement. The trend's going to re-engage. Rarely will you see the numbers line up like that where you say, oh, this trend's not going anymore. This trend's over. That's very, very rare. It's usually the opposite, where at the retracement phase, everyone thinks the trend's over when it's not. Which is what you'll see if you go back and look at some of the euro charts from July and August. A lot of these. If you go, actually, I'll show you. Have a look. If you go to, it's let's see here. We'll go to historical. Yeah, there it is. Historical position. So, this is another way to do it, and you can download these data from Wanda, which is another cool thing to do. Here's how to read this. Let me go. Just one thing, okay? So. The blue mountain here is telling you what percentage of traders are going long, okay? So you can see that okay, I'm gonna do it. I'm gonna switch it the other way. It doesn't matter. Okay. So what we really want to pay attention to is when does the percentage of traders going long dip below 30%. So you can see here, back here, September 29th, 2016, price was at 86.19, which is the black line, and 22% of the traders were going long. What happened after that? It went straight up. It's going up. And all along during this trend, you're still seeing fewer than 30% of the traders are going long. That tells you the trend is going to keep going. What happens up here? It's 28%, 29%, and then look, it starts to fall, right? 26%, 22. There's another peak here. Okay, boom, 31%. So this double topped. So during the retracement here, it still didn't have enough to fall, but then when it double topped, it broke 30, and then it's over. Okay. We'll go again here, and at this point we're at 33, because that doesn't break our here we go, 34, 33, 30. Okay, here. Okay, so 30% of traders are going long, 28% of traders are going long, and it's shorting. It's falling. So this is not okay, and then it goes back to 30. So this is a very brief one here before. So this one is an example of where it wouldn't have worked out. But remember, you weren't in an uptrend anyway, really. It kind of got to, at the end of the uptrend, people were getting a little bit crazy. Okay, we'll go down here. Let's see, where's this one? 26. So here's another example. It's broken through 30, and what does it do? It flatlines, and then it goes up. It's still up. Pulls back over 30, goes back under 30, flat lines, goes up. You can see it's going up. All of this uptrend here is between 25, 24, and 28. See? And then finally it falls again, and the trend is over once you get down here. You can see. So what we're seeing here is that the retail traders are telling us if there's fuel in the trend. And you can go back and you can look at this for any, like the euro was a great example recently over the last month. You can see, well, probably I'll go with last year. All during this trend, look at this. It's all low, low, low percentage of traders who are going along, and it just keeps going up and up and up. So it's a great example of that. I don't see it above 70 up here. It's mostly just, yeah. They don't allow you to go short. They only allow you to go long versus short or just long. So you have to just do the math, right? Yeah. Okay. Cool. So, are there any questions about how you might use sentiment? I've put the rules up here for you. I'll give you the quick and dirty again. Was it on my? Yeah. You're just going to identify a trend. Again, if you need a consultant for that, that's fine. It's easy. It's easy. It takes the thinking out of it. You wait for the pullback, and then you decide, is that a pullback or is that the end of the trend? And in most cases, you'll see the retail traders telling you, nope, that's just a pullback. And then once I get a candle confirmation, I go ahead and go long or short or whatever the trend is. That's basically it. It's pretty simple stuff. And so if we look at the data now, really the only ones that would be interesting would possibly be the euro yen and the euro pound, the euro Aussie potentially also. Go back. Euro Aussie here is also close. Still hasn't updated. It's still the same number. That's close as well, but there isn't. Oh, there we go. It did update. It's not quite there yet though with the euro Aussie. So I'll be looking at euro pound and euro yen trades. Cool. Awesome. Great. Any charts that you would like to see now? I will give you a quick recap of what I'm looking at, and you can type your charts in the chat box, and we can go over those. Number one, I think that when the USD CAD, when the loonie gets up to about 1.2450, if it prints a bearish candle, I will short it there. The reason why, support. This is what we call a first touch trade. First touch trade. It's the first time the markets come back to see a support and resistance level from the other side. So it was support forever, and now it's going to be resistance. Now, it needs to give me a bearish candle. If it prints this little neutral-looking bearish candle, that doesn't count. It needs to be a nice, big, fat red candle like this one right here. That's what I'm looking for. Again, if you have any charts, you want to see the pound yen or whatever, type it in the chat box, and I'm happy to look at it. But I just want to show you the charts that are interesting to me right now. Certainly, the CAD is one that's on my radar. If it gets there, I'll get an alert, and I'll know, and I'll be watching for a big, fat, bearish daily candle. Euro yen, for the reasons we talked about before, which is the fact that so many traders are shorting it right now. The retail traders are telling me that this is probably going to at least double top up at 34 and possibly even take that out and go higher. Euro pound also, as we talked about, again, what I'm expecting to happen here is that we'll see some sort of long-tailed kangaroo tail or just a long-tailed wick. That's it. That's it. It's game over, and we're going to bounce from here and go higher, which is fascinating because this looks like a bearish formation, but something's going to happen. And then CAD yen is the one I'm actually in right now. See how it's doing. Where is the CAD yen? There it is. Oh, cool. It's gone in profit. So CAD yen, I bought at 91.05. Stop loss is at 90. I'm targeting 93, 94.20, and then the trailing exit. So it's like a split position is the way I deal with that. It's equal. So one's going to go for 195 pips. Another one's going to go for 195 pips plus 120 pips, whatever that is. 295, 315 pips, and the other one goes for who knows what. And that'll be a 3 bar exit, which is in the Naked Forex book. The 3 bar exits in there. What else? Oh, it was interesting to me that the Swissy was one of those pairs that yesterday or the day, I think yesterday, it was hovering around 69%. I thought that was interesting that so many people are going long. It may be time to short USD Swissy. I don't really see it on the chart. Like I don't really, you know what I mean? There isn't really a downtrend. It's kind of like the euro pound, where it's um, you know, everyone's going long Swissy, so maybe the trend is over, sort of thing. You know what I mean? Everyone's going long USD Swissy, so maybe this is over. But again, it's not at the 70% level. I just think it's interesting that it's doing a similar thing to the euro pound, where everyone's thinking, "Oh yeah, it's trending higher." Well, I don't think so. I think it's maybe it has another touch of the 97.70 area left, but it also might have been it. That's it's going to turn around from here, so we'll see. Um, and that's probably it for me. Euro pound, euro yen, Swissy, CAD yen. The pound is interesting because of what it's done here. It's in this bullish channel. I would be I would be somewhat tempted, um, if we were to snap back up here on this 4 hour candle and close clearly above my little channel line, which I have at 34.26. I would be very tempted to go long if this ended up. I think this candle is going to close in about 2 hours and 15 minutes. But if this one were to, and I might not be awake then, probably most likely will not. But this could give us some sort, could even give us like some sort of a daily kangaroo tail. This would be a daily trendy kangaroo tail if it snapped back higher. I don't know if you're familiar with those from the Naked Forex book, but it's basically a kangaroo tail after consolidation like this. So it consolidates and then it makes the lowest low here in a bullish trend with that. That could be interesting. And given what we know about the euro pound, it's quite interesting, but we'll see. We'll see. Because, what we would think would happen if the euro pound in fact goes higher, we would think that the euro would go up and the pound would go down. But we'll see. We'll see what happens here. So that's another potential trade right there. And that's probably about it for me. I'm probably not going to be jumping at anything else. I wanted to take the yen today, but it went without me. So I was going to go long, as you can see here. I was going to take the CAD yen and the yen today. I was going to buy at 112.55 or 8 pips above the Asian high, but it's already kind of taken off without me. So I was going to target 113.90. It kind of took off a little bit earlier than I had hoped, so I missed that sucker. But that's all right. I don't get upset about that stuff. So we'll see. So that's all I've got for you guys. Any questions about any of this? Or are we all clear? All good? Cool. It's always good, I find, to get away from the charts for a while. Like, cool. Thanks, Albert. Thanks, Nick. Thanks, Greg, Adam. Cool. Like what I've noted, I went on a holiday and I looked at the charts once during that time. And what I like about that is, when you're watching the charts every day, you kind of get these theories in your head, like it could do this or it could do that. But when you don't see them at all, and then you come and you're like, wow, like, it's almost like you're more open to possibilities when you're not watching the charts. I guess that's the best way to say it. Like, I feel like I'm at my best when I don't look at the charts that often. The fewer looks I give the chart, the more likely I am to see it for what it is. And I don't know if that makes sense, but I don't know if you guys have experienced that. I find that sometimes you get locked into confirmation bias, which is basically what it is, where you see things that just confirm your view, and anything else that doesn't confirm your view just kind of throws out, you throw out the window. But with this, being away from the charts, which is why I think taking a break is great. You see it so clearly, it's great. So, yeah, this is an interesting chart, the EuroCAD. I probably wouldn't be doing anything other than, buying if it came down here, but I don't know. And that's kind of an interesting spot down here because you've got resistance here, support. Boy, if it were to get down here, that would be a tempting area for a buy. But yeah. All right, folks. I hope to see you. If you're a member, I hope to see you in the forum. We've got the cryptocurrency webinar on this week as well. Hope you can make it. I wish you very happy trading. Take care, guys. We will see you next time. Have a great week. See ya. Happy trading, everyone. See ya. Bye.